Imagine waking up to news that could catapult your Bitcoin holdings to new heights. What if the latest CPI data is the spark Bitcoin needs to explode? Today, February 18th, 2026, with Bitcoin hovering around $68,000 after a volatile week, we're diving deep into what the January CPI means for BTC and what's coming next. Stick around for exclusive insights backed by top sources that could guide your next move. For 100% true news and correct advice like this, like the video, subscribe to Joseph Markets, and comment Joseph Markets below. It powers more fact-checked content for you. By the end, you'll know the potential paths for Bitcoin and how to position yourself. But let's start with the current landscape. This video key points. Research suggests that the softer-than-expected January 2026 CPI data, with headline inflation at 2.4% year-over-year, has provided a bullish catalyst for Bitcoin, increasing expectations for Federal Reserve rate cuts and boosting risk appetite. It seems likely that Bitcoin could rally towards $72,000, $80,000 in the near term if momentum sustains, though resistance at $70,000 remains a key hurdle amid ongoing institutional caution. The evidence leans toward a short-term relief rally rather than a sustained bull run, given persistent core inflation at 2.5% and broader macroeconomic uncertainties, but long-term fundamentals, like stablecoin growth, support optimism. Investors should monitor upcoming Fed decisions, as a dovish pivot could propel Bitcoin higher, while hotter future data might trigger pullbacks to $60,000, $64,000. Understanding the CPI impact. The January CPI report showed cooling inflation, which historically favors speculative assets like Bitcoin by signaling potential monetary easing. This data, released on February 13th, 2026, marked the lowest headline rate since May 2025, driven by declines in energy and moderated shelter costs. Bitcoin's reaction. Bitcoin surged up to 6% immediately after the release, briefly reclaiming $70,000, reflecting renewed investor confidence. However, the rally has since moderated, with BTC trading around $68,000, $69,000 as of February 18, 2026, amid profit-taking and leverage adjustments. What happens next? Short-term upside targets include $72,000 if $70,000 breaks, with potential for $100,000+ by year-end if rate cuts materialize. Risks include a failure to hold support, leading to tests of lower levels, but on-chain metrics like whale accumulation suggest resilience. The current Bitcoin market snapshot post-CPI. As of February 18, 2026, Bitcoin is trading around $68,000 to $69,000, showing resilience after an initial surge following the January CPI release. This comes after a brief dip to $65,000 earlier in the month, with the asset now up about 1 to 2% over the past 24 hours, but still down 45% from its October 2025 peak of $126,000. According to CoinDesk, Bitcoin remains under pressure near $68,000, even as panic ebbs, trading just under $68,000 with a 1.2% drop over the past 24 hours. The broader crypto market cap has stabilized around $2.4 trillion, reflecting a cautious rebound. The immediate catalyst was the January CPI data, released on February 13th, which showed headline inflation at 2.4% year-over-year, below the expected 2.5%. This softer print has reignited hopes for Federal Reserve rate cuts, potentially as early as April, boosting risk assets like Bitcoin. Monthly headline CPI rose 0.2%, also below forecasts, while core CPI held at 2.5%. According to the U.S. Bureau of Labor Statistics, the Consumer Price Index for all urban consumers increased 0.2% on a seasonally adjusted basis in January, with the All Items Index rising 2.4% over the last 12 months. For U.S. investors, this snapshot signals opportunity. Bitcoin's volatility index is low at around 38, suggesting potential for sharp moves. Trading volumes have spiked post-CPI, with over $50 billion in daily turnover, indicating renewed interest. However, ETF outflows persist at around $410 million recently, tempering enthusiasm. According to Bloomberg, ETF outflows reflect ongoing caution despite the CPI relief. If you're holding or considering buying, understanding the CPI details is crucial. Let's break it down next to see why it's bullish for Bitcoin. How has the CPI affected your Bitcoin strategy? Share in the comments, and for more updates, like, subscribe, and comment. Joseph Markets. Breaking down the January 2026 CPI data. The January CPI report was a pleasant surprise for markets, showing inflation cooling faster than anticipated. Headline CPI rose 2.4% year-over-year, down from 2.7% in December and below the 2.5% forecast. This marks the lowest level since May 2025, largely due to base effects and declines in energy prices. Monthly, headline CPI increased 0.2%, below the expected 0.3%. According to CNBC, consumer prices rose 2.4% annually in January, less than expected, with the CPI accelerating 2.4% from a year ago, down 0.3 percentage point from the prior month. Core CPI, excluding food and energy, came in at 2.5% year-over-year, the lowest since April 2021, matching expectations but showing moderation. Monthly core CPI rose 0.3%, slightly above December's 0.2%. Key contributors included shelter costs up 0.2% monthly and 3.0% annually, food up 0.2% monthly and 2.9% annually, while energy fell 1.5% monthly and 0.1% annually, driven by gasoline down 3.2% monthly and 7.5% annually. According to the U.S. Bureau of Labor Statistics, shelter rose 0.2% and contributed significantly, while energy fell due to gasoline declines. Other notables: used cars and trucks dropped 1.8% monthly and 2.0% annually, airline fares surged 6.5% monthly, and medical care rose 0.3%. The report was delayed due to a government shutdown, with missing October-November 2025 data, but revisions to seasonal factors didn't alter the cooling trend. According to Reuters, U.S. consumer prices rose less than expected in January, amid cheaper gasoline and moderation in rental inflation. Why does this matter for Bitcoin? Lower inflation signals potential Fed easing, reducing borrowing costs, and encouraging investment in assets like BTC. Historically, soft CPI prints have preceded Bitcoin rallies, as seen in 2023. But with core still sticky, the Fed might remain cautious. This data sets a bullish tone. Next, Bitcoin's immediate reaction. Bitcoin's immediate price. Reaction to the CPI release. Bitcoin responded positively to the softer CPI, surging up to 6% intraday on February 13th, briefly reclaiming $70,000 and testing $71,500 before pulling back. It climbed from around $65,000 to $69,190 on major exchanges, reflecting a relief rally as investors bet on earlier rate cuts. According to CryptoSlate, Bitcoin spiked 6% on softer U.S. inflation, climbing to threaten $70,000, though facing failed attempts to sustain beyond a brief rally. This move liquidated $101 million in shorts, with open interest dropping 28% and funding rates flipping negative to 0.003%, meaning shorts now pay longs. By February 18th, Bitcoin has stabilized around $68,500, up 1.24% from its 24-hour low but down 0.65% daily, showing some profit-taking. The rally was spot-driven, with institutional and retail accumulation noted, rather than leveraged pumps. According to CoinPaper, Bitcoin price reclaimed 70Ks as US CPI fell to 2.4%, with BTC trading at $69,125, a 1.24% surge from the 24-hour low. Ethereum and other altcoins followed, with ETH up 0.48% to $1,168. Sentiment shifted from extreme fear to neutral, with the crypto fear and greed index improving. However, missing 2025 CPI data obscures the full picture, adding uncertainty. According to CryptoSlate, market sentiment reflects calm from softer data, but missing 2025 data from shutdown introduces uncertainty. For you, this reaction highlights Bitcoin's sensitivity to macro data, a positive sign, but watch for consolidation. Why is this bullish? Let's explore. The CPI could unlock Bitcoin's next big move. Stay for the details. Like and subscribe to Joseph Markets. Comment Joseph Markets for more. Why the CPI data is bullish for Bitcoin. The cooler CPI boosts Bitcoin by signaling potential Fed rate cuts, making borrowing cheaper and encouraging risk-taking. With headline at 2.4%, odds for an April 25 BP cut rose from 19% to 26% on Kalshi and 13% to 20% on Polymarket. Lower rates reduce yields on safe assets, driving capital to high-return options like BTC. According to CoinPaper, this data raised expectations for earlier rate cuts, with odds increasing on trading platforms. Historically, rate cut cycles have fueled Bitcoin gains, like the 590% surge in 2020-2021. Declining real yields to 1.8% on 10-year treasuries, lowest since December 1, 2025, favor non-yielding assets like Bitcoin. A weaker USD post-CPI with record short positions cheapens BTC for global buyers. According to CoinDesk, dwindling U.S. inflation and lower real yields offer tailwinds to Bitcoin. Stablecoin market cap at $307 billion indicates sidelined capital ready for rotation. According to CryptoSlate, 307B stablecoin cash waits, suggesting potential risk rotation. On-chain, whales accumulated 53,000 BTC recently, and spot buying drove the rally without leverage spikes. According to Xpost by Writing Cryptos, this is spot buying, not leveraged pump. Healthier rally driven by shorts closing and real accumulation. For U.S. investors, this means Bitcoin could hedge against easing policies, but risks loom. Next section. Potential risks and bearish factors post-CPI. Despite the bullish print, core CPI at 2.5% remains sticky, with shelter and services persistent. The Fed might delay cuts, as January 0.3% core monthly rise reflects one-off increases not fully seasonally adjusted. According to Reuters, underlying price pressures still exist, with core CPI up 0.3% after 0.2% in December. Missing 2025 data due to shutdown obscures trends, relying on models like Cleveland Fed's Nowcast. According to CryptoSlate, missing 2025 data obscures the full picture. Bitcoin's correlation with S&P 500 93% and gold 91% means broader weakness could drag it down. ETF outflows of $410 million signal institutional caution, and OI decline suggests deleveraging. According to VanEck, ETF flows slowing but inflows resuming post-CPI. If $67,000 support fails, drops to $64,000, $66,000, or $60,000 possible. According to CCN, a hot CPI could pressure towards $60K, though data was cool. Quantum risks and regulatory stalls add long-term uncertainty. According to Seeking Alpha, regulatory hurdles weigh. Balance with diversification. Technical analysis. Key levels to watch. Technically, Bitcoin broke above $68,000 post-CPI, with RSI recovering from oversold, below 21 to neutral. The rally formed a potential Adam and Eve pattern, targeting $80,000 if $72,000 clears. According to CoinPaper, an Adam and Eve structure suggests rally above $72,000 toward $80,000. Support at $67,000, $68,000, with 50-day MA as backup. Resistance at $70,000, $71,500, where shorts cluster. According to CryptoSlate, attempting to breach $71,500 but failed. MACD is recovering but below zero, indicating stabilizing momentum. Volatility at 38, half 2022 levels, suggests compression before breakout. According to VanEck, 90-day volatility at 38. Bear flag recovery curve repeats past cycles, hinting upside. According to CoinPaper, repeated bear flag followed by recovery curve pattern. For traders, hold 67K targets $69,700, break above 70K eyes $72K. According to Xpost by Ask Gigabrain, hold 67K targets $69,700. Watch for continuation. Experts predict wild moves. Don't miss their takes. Subscribe to Joseph Markets. Comment Joseph Markets. Expert opinions and market sentiment. Experts are optimistic post-CPI. Kathy Wood sees 150K plus with cuts. According to CoinDesk, dovish Fed lifts. Standard Chartered, 100K. according to Investopedia, recalibrated to 100K. JP Morgan cautions hawkish risks, but notes 60K of hot. Data was cool. According to CCN, CPI could pressure to 60K of hawkish. L-Bank. Defend 68K amid accumulation. According to L-Bank, can BTC defend 68K after CPI drop? Sentiment. From extreme fear to neutral, with long-short ratio 1.63 favoring longs. According to X-Post by Ask Gigabrain, long-biased LS at 1.63. X-Buzz. Bullish on softer CPI boosting hedges. According to X-Post by Gaz BTC21M, softer CPI is bullish for Bitcoin. But debates on sticky core persist. According to Advisor Perspectives, CPI cooling but inflation, overall lean bullish. Short-term outlook. Next few weeks. Short-term, Bitcoin could rally to 72K, 75K if 70K breaks, driven by cut hopes. According to CoinDCX, trade 65K, 67.5K till Feb 16, then higher. If fails, pull back to 64K. Next CPI March 11, Fed March 17th and 18. Nowcasts, Feb CPI 2.36% headline, 2.42% core. According to CryptoSlate, next CPI March 11, nowcasts at 2.36%. Watch jobs, yields. Long-term outlook, 2026 and beyond long-term. 100K, 150K by year-end if easing. According to Changelly, minimum 130K in 2026, up to 200K in bull case. According to Forex.com, beyond 100K to 150K, 200K. Fundamentals, adoption, halving support. Risks, stagflation. According to Investing.com, macro hurts. Investment strategies and final thoughts, DCA 15% diversify. Monitor Fed, CPI signals opportunity. There you have it. Bitcoin's path post CPI. Like, subscribe Joseph Markets, comment Joseph Markets.